Welcome to another stage analysis video. It's Sunday the 23rd of July 2023. Got a fair bit to get through this weekend as usual. Going to start off with the major indexes before getting into the futures charts. Have a look at the industry group relative strength rankings, market breadth charts, the bell curve for the industry groups before finishing off with some of this week's stage 2 breakout attempts and the watchlist stocks from the last few days or so. So, right, getting started. Let's get back to the major US indexes. Came off a little bit at the end of the week, was much heavier in other markets such as the Nasdaq. But starting off with the S&P 500 here, you can see it's only just a little bit off its 52-week highs here. We're just down by about 1% off the highs, so still in a strong stage 2 uptrend, which has been in now since obviously the later part of March. It started to move, but more convincingly during May. It's starting to move out from the first major base structure within the stage 2 advance at the moment for the last few weeks. You see percentage of stocks above their 50-day, 150-day and 200-day moving averages combined, which is a custom chart that I do for the members on the stage analysis site, which gives a good overview of what's going on in the market on a short, medium and long-term basis in one sort of look. Above the 60% level here, so 0.6 is our obviously more bullish zone. You're in the potential stage 2 zone. 60 to 40% zone for a day is generally when you're more of a stage 1 zone, and below 40% is more stage 4. So this covers the entire market based on the NYSE and the Nasdaq composite stocks. So it covers just over around 5,000 or so stocks, maybe a little bit more depending on what's in there each week, but it's a good broad measure, and at the moment we're sitting at 62%, so just moving potentially into the stage 2 zone, which as you can see obviously lagging behind what's been going on in the S&P 500 here. But as I said, this is considering the broader market, so you've got the NYSE and the Russell 2000, etc., which have both been lagging of late. But NYSE did actually break out into stage 2 this week. I will show you that in a little bit. Looking onto the daily chart here, you can see it got a little bit extended into Tuesday, Wednesday above its free ATR level on the daily chart there. It's pulled back in a bit, but not too much at the moment. Percentage of stocks above their 20-day moving average in the S&P 500 sitting at 84.4% at the moment, so holding on in the upper zone here, which is obviously shows a short-term uptrend. Another way we determine the short-term uptrend is when it's above this line here, which is the plus 1 ATR level, which is 1 ATR from the 21-day exponential moving average, which is our 1-month moving average on the daily chart there. So when we're plus 1 ATR above that level, we consider it in a short-term uptrend, and you can see we generally only get small pullbacks below when it's in a strong short-term uptrend, so it has been, and that hasn't been violated as yet. So we'd need to come off a fair bit more in order to violate that yet. We'd need to drop back another few percent or so to change, to see a change of behavior. But at the moment, still in that short-term uptrend. NYSE, on the other hand, this week had a strong week, closed up plus 1.55%, which doesn't sound an awful lot, but seeing the NYSE there doesn't generally have that many big weeks. So it was a fairly good week for the NYSE, but did manage to close at a new 52-week high, as we can see here, closing above the earlier in the year, what was that, January, February, late January pivot high there, as well as the previous pivot highs from the last 52 weeks here. So see where it's obviously during the stage 4 decline and the developing stage 1 structure. So just attempting to potentially break out into stage 2. And this is a key level, as you can see, throughout the course of the last 2 years here. It's been tested numerous times throughout that period. So yes, on both sides, support and resistance. So it's now breaking above that for the first time a little bit more convincingly, with a close above that level, with percentage of stocks above their 200-day moving average in the NYSE at 69.36%. So more than 2/3 of stocks. So there's our 50% level through the middle here. So we're in the upper half of the chart here, just getting towards what some people would consider the overbought levels. But when you're in stage 2, you generally stay above that level. So you can see back here, back in November time, for example, in 2020, all the way through its stage 2 advance before it started to turn more convincingly towards stage 3. it spent the vast majority of the time from November to August above that 70% level. So you can see currently we're just under that at the moment. So if we do move out into stage 2, we would expect this to push its way out into the upper realms and hold into the higher levels for the entirety of the stage 2 advance, really, with only a few pullbacks below. So Nasdaq Composite, on the other hand, had a bad week. It's only off 0.57%, but it had what we call a key reversal week there with this would be known as a buying climax candle. So it's a new 52-week high, and it closed the week lower than the previous week. So that's what we call a buying climax there. So only a short-term one at the moment doesn't necessarily mean it's an ultimate high. It's only a single week's candle, but you can see it's at a key resistance level, obviously an old technical level from back in January and what was that, March, April time in 2022. So nothing too serious at the moment, just a reversal, only a small pullback. Obviously still well above its rising 10-week moving average and a long way above its rising 30-week moving average. So if it does pull back and start to form a broader base pattern here, then that would be obviously still within the normal realms of a stage 2 advance. There's no change of behavior as yet. Percentage of stocks above their 200-day moving average at 45.36%, so actually making a higher high here, so continuing to advance while the price index there was reversing. So still in the lower half of the chart low, so still underperforming versus the NYSE in terms of the percentage of stocks above their 200-day moving average. But that's in a lot of parts due to the depth of the stage 4 decline in the Nasdaq. So obviously many stocks got destroyed, especially the likes of the tech stocks, the software names, etc., that had 70-80% decline, some even more. So they've taken a lot longer to get back to their 200-day moving averages and above, for example. So that's potentially why we've had this lag in the data, as there's a lot of more washed out type stocks that might be having strong rallies now, but don't necessarily reflect in this figure here, as they're obviously still, many of them, more than half underneath their 200-day moving average while doing that. We look at the daily chart quickly here, you can see it was a bit more of a strong reversal. There was a number of the heavy mega cap techs taking some hits. Tesla obviously came off quite a lot on Thursday and was about 9-10% move off after earnings. Some choppy action there, but then tightened up again on Friday. We've also got the rebalancing going on over the weekend, so whether that has hit yet or whether that's going to hit on Monday is unclear as yet. So but at the moment, still above the 21-day exponential moving average here. So that's as I said, our 1 month moving average. Is 252 trading days in a typical year. So divided by 12, you get 21. So that's our typical 1 month moving average, and why we choose to use the 21-day EMA. But obviously you can use whatever EMAs you like, but it just gives a good rough idea of what the short-term trend is. So again, looking for a change of behavior, we'd need to see it break. If it starts to break back below these two recent pivots, and then obviously we get a pull back towards the 50-day moving average, that would be obviously more significant. But at the moment, the trend remains intact. It's still, although it's getting a little bit more volatile at the top here, still hasn't had a change of behavior yet, as the previous pullback in June has not been violated as yet. Look at the Nasdaq 100, very similar behavior, a little bit higher than the Nasdaq Composite there. It's actually moved above the technical levels from early 2022. So again, another buying climax candle there. Percentage of stocks above the 200-day moving average at 82%. So in the strong stage 2 range, you can see throughout the course of the stage 2 advance there, it's held mostly above the 70% level. So as I said previously, when you're in stage 2, as you can see, you can't see the entire of 2020 through there. You see until September 2021, it was still above that 70% level the entire time. So we are in that strong stage 2 position, and until that changes and we start to see strong moves back below the 70% level, then obviously we wouldn't be considering it a major change of behavior at any time soon yet. So looking at the daily chart again briefly, just 79% above their 20-day, so a little bit more choppy, but again you can see that 180R level. So throughout the course of the stage 2 advance, it's generally been above this 180R level. a few brief pullbacks below it towards the 21-day moving average and then rebounding back through. So we're back at that test level here. If this gets any deeper, if we start to move back below the 21-day moving average here, then that potentially would be a change of behavior again, and it would move below these two new near-term recent pivots. So that would again signal a change in what we've seen throughout this course, and potentially the start of a broader base structure potentially if that happens. But if it can rebound here, obviously we could just continue in the stage 2. But at the moment, in correction mode. Russell 2000 in its second week in stage 2 at the moment. It's had multiple failed breakout attempts before. The last major one was back at the start of the year in January, which rolled over. We had that significant reversal on the financial crisis when the regional banks started to come off, started to break back through and up, and then get through resistance in the last few weeks now. So you can see relative strength has started to pick up in the near term, but it's still underperforming versus the S&P 500, which is our 52-week moving average, which is what we consider the zero line. So of the Russell 2000 versus the S&P 500. So if it can continue to improve and get back through that level, then that would be consider it start outperforming at that point. But at the moment it's underperforming, but showing some short-term signs of recovery. So short-term outperformance only for the last few weeks here, but generally has gone sideways for the last 3 months or so versus the S&P 500 there. Look at the daily chart. You can see again pulling back in a little bit there. Came off a few percent on Thursday, and then Friday didn't only had a smaller result, but obviously gapped open higher a little bit and then came off again. So still well above its rising 21-day moving average, its 50-day and its 200-day. So moving average is in the right stacking order. It's above that level of support, the stage 2 breakout level. So if it does pull back in and around this 190, 189 area, then potentially could form that secondary entry zone in the method. So if we do get a pullback into there, we look for some kind of a bounce, look for a move out into stage 2 continuation. So secondary entry point potentially if it comes back in towards the stage 2 level and stabilizes and then starts to rebound back out again, and then obviously continuation levels as it starts to move out once more. But obviously it could continue on. Nothing to stop it too much at the moment. Just it's still within a short-term uptrend here. So at the moment, still early stage 2 on that one. Dollar index, we can drop onto the future